Welcome to another episode of Talks on Nature, a podcast by Anchor. And today we have our guest Jessica Smith, the nature lead at UNEP Finance Initiative. And we are going to talk about how finance can flow towards a nature-positive future. Jessica brings a wealth of knowledge on how financial institutions can align their practices with environmental sustainability. And we'll explore how banks, insurers, and investors can assess and mitigate the impacts on risk. We'll discover the innovative tools and frameworks that UNEP FI is also developing to facilitate this crucial shift. Welcome to another episode of Talks on Nature, a podcast by Anchor. And with me on the set is Jessica Smith, the nature lead at UNEP Finance Initiative. Jessica, welcome.
Thank you so much for having me, Dorothy.
So Jessica, tell us, what do you do?
So I lead a great team at the UNEP Finance Initiative, and we're part of the UN, and we're also a membership organization for banks and insurers particularly. So we provide an interface between the goals and aspirations, particularly the global biodiversity framework, and then the reality of making those happen in the mainstream finance sector.
Mm-hmm. And the other day you told me that you're finalizing your PhD. How is that going?
Yeah, so in the work that I do at UNEP FI, we're really looking at norms, standards, frameworks at a global scale and regional scale. Mm-hmm. And then my PhD is a lot more practical. It's also in the space of nature finance, but it's really looking at individual transactions and how do we finance community-led conservation. So it's a challenge doing both, but I think the PhD connects me to, back into the importance of why I'm doing this big picture work, more to, a local scale.
And with the big picture work, how many members do you have at UNEP FI?
Yeah, so we have around 550 members who are banks and insurers. Mm-hmm. And then we also work with the close to 200 signatories of the Finance for Biodiversity Pledge. Mm-hmm. And we also work with many of the leading signatories to the Principles for Responsible Investment. Mm-hmm. So we're really working with a lot of mainstream commercial finance actors.
And how does one become a member?
Well, you have to talk to our member team, yes, who will give you all the terms and conditions.
Yeah.
But with the banking side, we're looking for members who are willing to sign up to the Principles for Responsible Banking, mm-hmm. identify where are the impacts in their portfolios, and set targets and make progress on that. Mm-hmm. And similarly, in the insurance space, we're looking for insurers who are ready and willing to make change. In the investor space, we see a lot of leadership possible, and we're working particularly with those who've set portfolio targets through the Finance for Biodiversity Pledge.
Wow. So let's get into the technical side. What are some of the significant impacts that you're seeing the financial sector is having when it comes to nature, both positively and negatively?
Yeah, so when we're talking about the impacts, we're always a little bit, we're a degree removed when we're talking about finance. So we're talking about what are the financed impacts. And on the positive side, I would start by saying the financial system and banks, insurers particularly, have incredible capacity for innovation. Mm-hmm. So, what I find really important is the role of banks and insurers in being able to identify risk, transfer that risk, provide that capital that we need. So right now, very, very little of the capital from the mainstream financial sector is going into what we would consider positive. Mm-hmm. Right now, the State of Finance for Nature says it's about 140 times more harmful finance. So on the harmful side, we're seeing a challenge that financial institutions are finding it easier to put money into harmful activities, oil and gas, mining, maybe unsustainable agriculture with shorter returns, because those are familiar transactions. So I don't think that there's not a moral situation here. There's a fact that it is easier to do those familiar transactions in the system. So what we're trying to do is, rejig the system so that it becomes more normalized, cheaper, faster, easier, less risky to finance these more sustainable activities and to align the interests, for example, of the financial institution and the client. So there's a lot of moving parts in that dynamic. We're very far away from where we need to be, but we're seeing actually incredibly fast progress and a surge of interest from financial institutions who get that they actually need to do this to be a financial institution that exists in, 30 or 50 years, because the physical limits of our planet are being breached. And, there's no debate about that. That's just the fact. So we're seeing financial institutions now realize that this is part of their core business to take nature and climate extremely seriously.
And, Jessica, you talk about rejigging. And rejigging requires the policy environment.
Yes.
It requires a clarity within the financial institutions. It requires customers to understand. So my question is, how do we put all this together and actually create that familiarity that is required for finance to move into nature?
Yes. So there's three things there. I'll try to cover all three. So one is what an FI could do in a voluntary sense. Second is the policy angle, the financial supervision. And then third was the client role. So maybe I'll start with the client first.
Good.
So we have seen a trend that many financial institutions have sustainability teams that are aware of these topics, and they want to reach, the front office and the deal-making teams. And there have been successes, I would say, with climate. Many front offices are now much more fluent in helping their clients on climate. So we were part of a project by the Cambridge Institute for Sustainability Leadership, which was Let's Talk Nature with Climate. So bringing nature into those climate conversations. But also, even without information on materiality, we have published something for banks particularly that looks at key commodities and what are the no regrets actions that you can ask for clients. And as our banks have been using this, they're actually finding a welcome response from their clients, those who want to do the right thing and they just want to be, rewarded for it. And then those who've already been doing the right thing and they're glad to be finally able to showcase that to their financial institution and moving on that journey together. Then on financial supervision and central banking, we're seeing, for example, the NGFS, the group of central banks and financial supervisors who are leading on this topic, really start to take nature into account because they understand how it relates as a systemic risk in the financial system. So we're seeing a lot more nature-related risk guidance. And the UK conducted the first preliminary stress test for nature on 7 of its banks. So we are seeing action in that domain. And again, I think what's very important is it comes back to a financial stability topic, which is core to their mandate. And then lastly, what financial institutions can do on a voluntary basis. Because I think, frankly, the policy signals are not that robust right now for financial institutions on some of these topics. And even those financial institutions that are in a country that's leading may be nervous if they're operating in different jurisdictions to be, too prominent or too loud on these topics. But we believe actually there's a lot of gains to be made just looking at nature risk as a core financially material risk, particularly your dependencies, your supply chains, considering your physical risk. Those are very core parts of any business to be able to operate. And then second of all, there is a huge opportunity for, what some are calling transition finance or others are calling, mainstreaming finance for nature. Simply every single economic sector could be more nature positive. And there are ways to then have business gains and reduce risks. So we do think it's possible that financial institutions can act on nature just within, without making a commitment around impact or without making any other, additional ambition, but just because it's a core business issue. And then we also think that voluntary action feeds back to policymakers when they can see the business benefits are there from acting on nature.
You know, Jessica, one thing that the Alliance did this year, actually, we released a central bank stress testing report for 5 African countries. And of course, the results, indicated impacts in sectors such as agriculture, as would be expected, food, extractives. And one thing or one lesson that comes through that particular exercise is to actually bring all these sectors to the table, so that the results that the central bank stress tests actually, pick out can actually now be looked at by the various sectors. And I just want to check your experience in terms of sectorial pathways, or how to involve different sectors in this conversation. So that it's not just a finance conversation, but then how do you involve all these other sectors for any tangible action to be taken?
So at UNEP FI, we really focus on our membership-based banks, insurers, investors. So very much we've only been having a finance conversation in that sense. But as the nature transition guidance and the conversation around nature and systemic risk increases, we will be going in that direction next year. So we're starting with a partnership with the World Business Council for Sustainable Development and the World Economic Forum to look a little bit more at that real economy angle. And each year we start the new year, January, with a webinar called New Green Shoots, which gives the latest trends in nature finance. And actually we're introducing next January a sister webinar to that, which will be showcasing what are the opportunities happening in the real economy. So in the major traditional sectors, but also in the solution space, because we know that there's so much on the plate of financial institutions, and we want them to really get excited about the opportunities that are out there that are, more plentiful. And I think you mentioned this at Building Bridges as well. You have pipeline opportunities, and we're seeing growth in businesses that are putting solutions for nature on the table. So we want to show our financial institutions these types of opportunities that are out there in these pathways and in the solution space. And, get them really energized about the opportunities that are ahead in this new nature economy.
And now let's speak about the client, the customer. So policy set, financial institutions set. What about the client?
So for most financial institutions, the clients fall in 2 big buckets, so sovereign and business. And just on the sovereign conversation, so we brought a large number of financial institutions to the COP, the biodiversity COP in Cali. There's different estimates because we have challenges in counting where everybody is. But, thousands of representatives of financial institutions came to Cali, business, all kinds of other stakeholders. So around 800,000 came to participate in green zone activities, and then 26,000 or so into the blue zone. Many more.
These are financial institutions?
No, these including the wider.
But they say it was the largest FI and real economy representation at a COP.
Exactly. So really a huge mobilization of interest, including, a good number of financial institutions. And, what we were really impressed by was the seniority of financial institution representatives. So many brought their CEOs, some brought their entire C-suite. At our LAC Region Finance Day, we had 8 CEOs who stayed from 8 a.m. till 8 p.m. And, really we saw them there saying, what can we do? How can we help? And actually the challenge in the conversation was that countries weren't coming in force, and actually the exception was African countries. This is why I wanted to bring this back. But many regions in the world, they didn't come with their updated national biodiversity strategy and action plans or their full targets, or they presented them only at the COP. So they weren't ready for that conversation on financing, but the financial institutions were there and ready for that conversation. And then in terms of different businesses, I think, there's, when we break down all the different sectors of our economy, there are, too many to mention to go into detail. But I think those sectors of the economy that have high impacts and high dependencies on nature are, realizing the inevitability that they will need to either adapt or they will be, leapfrogged by other businesses who are providing solutions, who are operating within planetary boundaries. So there's obviously pockets of resistance, and some businesses will be, there will be legacy sectors that don't make the transition into the new nature economy. But I think on the whole, all of our banks particularly have come back reporting very positively about the engagement opportunities and the fact that their clients seem to be ready and willing. On the sovereign side, I think we can't talk very much about this without debt for nature conversions being a big topic, and most emerging market countries, especially in Africa, are facing some degree of debt stress. And really, the fact that they can offer, nature positive opportunities that the world is valuing, that can bring down their maybe their repayment stress or push out repayments, or even have some debt forgiveness. Although there's still elements to be worked out, it seems promising that we can deal with those two topics in tandem.
So there's a lot going on. There's a lot to be done. And this year, I've seen so many tools and frameworks that UNEP FI has released. Yes. I think I saw the nature positive insurance one very recently. What are some of these frameworks and tools, and where can we access them?
Yes. So we're getting much more granular. So there's something for everyone. Yeah. So we have guidance that is really specifically for banks, and we have tiers of ambition. So you can, come in as a bank with the PRB Academy, which is just, giving you the first window to nature. We have a learning journey for our banks, and we also have a target setting working group. So we have target setting guidance available for banks, and we'll have impact target setting guidance released during the new year with UNEP, WCMC, and Oxford University that we will ask our banks to pilot. And then, yes, we're extremely thrilled. Our journey on nature positive insurance. So we've created really the first quite robust guidance for insurers to make a contribution to nature positive. And then the overarching framework, we have worked with the Finance for Biodiversity Foundation, and I'm happy to share that we've had a Jeff project approved, so we'll be working also through WWF on a project to build that framework out. But the Finance for Nature Positive working model is based on demand from our members and from the F4B membership to really understand how can a financial institution, at a single individual level, make that contribution towards a societal goal. So it emphasizes that if you're just implementing existing guidance, that's not ambitious. That's a kind of level one. If you are bringing nature KPIs into transition finance, mainstreaming finance, financing solutions, that's great. And we refer to that as nature mainstreaming. If you are financing a transition plan, we're still some months or years from that, but that, that would be a different category. And then for us, the difference with nature positive finance for nature positive, is that you're making a measurable contribution. And we are suggesting how to do that for different asset classes in the paper at a high level. And then there's others out there who are providing metrics. But then we've also given a third level, which is that you have coherence across your whole portfolio, that you understand the impact of your portfolio, and that you have policies across your portfolio. So we're not only talking about putting, mainstreaming finance out there, or finance for, conservation or restoration, which is very welcome, but phasing out harmful finance, also finance that's contributing to the drivers of nature loss, including climate change. So we want to make sure that financial institutions are looking at the big picture. And we have released another piece during COP16 called Nature in the Boardroom, which is basically how to bring that message into the C-suite, because we see activity across maybe, 10 or 12 different departments of a financial institution, but how to bring that to the C-suite and convey that it's part of the fiduciary duty of the FI to consider nature in all these ways.
And when we talk about the harmful, finance, what are some of the recommendations in terms of measuring the progress towards that?
Yes. So, for example, in our PRB nature target setting guide, we've given a very detailed annex in the back, which is basically, how to categorize finance that should be phased out, finance that could be an engagement opportunity, and what are those opportunities, and then the finance that is a seek out opportunity. And we have given broad guidelines on, something like the EU's asset ratio, green asset ratio, so that you can basically categorize your portfolio according to these groupings. And you might be familiar around the monitoring framework of the Global Biodiversity Framework. There is an indicator, D3, which is about private finance. So how do we track the private finance that's either supporting or, deviating from the goals of the Global Biodiversity Framework? So we are hoping to launch a process with our membership platforms and some of our peer membership platforms to get financial institutions to voluntarily report. So in Cali, there was no agreement on the monitoring framework, and there's no guidance for this indicator right now. So that indicator is blank. Our view is that we shouldn't only have reporting on the positives, because that doesn't give you the full picture. So our recommendation is to ask financial institutions to pilot reporting, and then for countries to be able to see what that looks like and how it fits into their decision-making. We're also looking with our colleagues in UNEP's Climate Finance Unit on how do we update the state of finance for nature reports. So we have broad estimates, but right now what we need is to be able to connect these actually to the needs of countries. So countries now with, hopefully a full suite of updated national biodiversity strategy and action plans will then have financing plans. And what we want to do is to be able to matchmake to say, okay, these countries have these opportunities. It's a menu of opportunities in some respects. Not all are amenable to private finance, but, many have opportunities. And to make sure that the finance that's coming online is actually meeting those needs. And where is it meeting? And then where is it not? Where could it be? And then maybe where does public finance need to play, potentially a bigger role. And we know public finance is scarce. So we want to be as granular as possible in terms of, where private finance can pick up the load, and then where that scarce private finance could come in, and where other policy measures might be more appropriate.
The linkages to finance is so important, because that's when you see countries leaning in, other than the compliance aspect of having their national biodiversity strategies and action plans, in place. And where do you see that linkage, considering not too many countries were able to submit their NBSAPs? Some postponed because of, many other challenges. How do you see those linkages working?
Yes. Well, so I think when we talk about finance, normally people talk about Target 15 and Target 19. But actually, I think the way that countries approach this, Targets 1, 2, and 3 are the ones that they're looking to finance. So one is avoiding damaging the most important biodiversity areas. So that's a safeguards issue for finance. Second of all, the restoration target, that is one that I think is eminently financeable. There's a lot of opportunities to create public-private partnerships, to use the tools of project finance, like project finance for permanence, to finance restoration. And then the third one is protected areas. And actually, I have been working with IUCN's Commission for Protected Areas on a publication on financing Target 3 and looking for the opportunities for private finance to help in Target 3. And here we actually see, a big picture sovereign finance is something that banks, can assist with through capital markets. Second of all, insurance products.
Yes.
We've just scratched the surface on what insurance can do. So parametric insurance. And it's like going into the matrix when you start to, imagine all the ways if we can align. And I think coral reef insurance is one that's, often a good illustration. But if it's in the interest of the insurer and the insuree to prevent damage, then now we get a business model that brings, the benefits to society and the benefits for the insurer together. And then second of all, when we're asking human beings to live with more nature, we inevitably will have, human-wildlife conflict or, other types of trade-offs. And there's a lot of potential for the insurance industry to come in on that side of the transaction as well. So not only the side of the client, but also the side of the stakeholders around a protected area who may be impacted by the protected area. So, in that chapter, which we hope will be launched soon, we look at some of these products and how they may be underutilized today, but we see potential. And then again, the more private finance can be crowded in, the better we can use this scarce public finance, because, protected areas are one that, they do bring a lot of returns to the national budget, for example, through park entry fees and through, visitors, et cetera. But they're not that easy to finance with private finance. So it's important that we think about those opportunities. And then as we're unpacking each of the national biodiversity strategy and action plans, I think that countries are seeing a lot more the drivers of nature loss. So they're a lot more interested to engage with, for example, agriculture or mining or forestry. And then, there all the transition finance products can be brought in. And, going back to that project finance model, governments can play a de-risking role. National development banks, regional development banks can play more of a de-risking role in those kind of transactions. So, I think we're really at the beginning of a very exciting era where we're able to get each of the players to do what they do best, and then we can all do more together.
Now, as we're speaking about countries, for them to value the wealth, for them to value natural capital, the concept of natural capital accounting and valuation comes out so critically. What's your experience, especially comparing, the different countries within which you work in?
Yes, that's a great question. And the UN system of environmental accounts is
C.
Yes,
it's called the C.
Yes, it's quite valuable here. And what I think is very exciting is actually at a policy level or a norms level is when we value that natural capital, it actually redraws the map of wealth in the world.
Exactly.
So where are the countries that have actually, preserved nature? And, when you get even more granular in that, I think it then brings you, to this hot topic at the COP in Cali, which was, the role of Indigenous peoples, Afro-descendant communities, local communities who are stewarding particularly food system biodiversity. So I think, that kind of information, it can be extremely powerful. And we're seeing also companies like the Land Banking Group who are looking at, for example, a broad scale way to value those services. The other one I can mention is from the Crowther Lab at ETH Zurich, the Restore platform. And, I think that we're just starting to be able to show those values which have been invisible on the balance sheet. And I know, Professor Das Gupta and the team process and others have been, working piece by piece on this. But I think we're almost at a stage where, we're able to then build financial products on the back of that value, more readily. I think there's still some starts and stops. But if we can move in that direction and, also make sure that the safeguards are there, because a lot of this wealth is in areas where maybe there are conflicts or there are insecure tenure, or maybe there's the chance of elite capture. We have seen a lot of really negative cases from the voluntary carbon market where those rights were not respected. So I think the message of the International Advisory Panel on Biodiversity Credits to make sure that rights piece is in place and is really a starting point for any of these explorations of building value on the back of that natural wealth. Really needs to be just one conversation, not two separate conversations or a nice to have.
I think one good thing that arose out of COP16 was the digital sequencing information aspect. I can see you smiling. And to your knowledge and to your understanding, and especially to our audience, what does that mean? And how does that link into, benefits, benefits sharing?
Yes, absolutely. So I was involved in some of the earlier access and benefit sharing work under the Nagoya Protocol, which, at one point it was called green gold. It was expected to bring a lot of benefits, and there was a lot of conversation, a lot of goodwill, and it was very hard for countries to see those benefits. There was a lot of really good efforts around biosafety and transparency and making sure the trading permits, et cetera, were properly in place, but it did not yield cash.
It wasn't the green gold.
It was not the green gold
expected.
It was not the green gold that was expected. So I think this discussion it broadens it. And I think the role of DNA in the pharmaceutical industry is extremely valuable. So, I know there's big hopes that there will be voluntary contributions.
Yes.
And I think that, the fact that there were pharmaceutical companies and actors coming to Kali and really engaging in these conversations makes me feel that they're taking it seriously. And I think once we're able to make that connection and see voluntary contributions, I think we then change the equation for communities who are actually stewarding biodiversity that has yielded benefits. But it is not easy, and it can be challenging to get that traditional knowledge fully valued and to really assign it, correctly. So I'm not optimistic that this will be the green gold boom. But I do think it's a step in the right direction. But
what exactly, what does it mean for our audience?
For our audience, so those companies that are benefiting from biodiversity through digitally sequenced information, so DNA, as an example, are being asked to voluntarily contribute to this fund that then gives back a benefit to those communities that have, provided that service to the world through the biodiversity that they stewarded.
Yes.
So there are definitely challenges in this, but I think that it's the only right direction to recognize those values. And the term biopiracy, there's been a lot of stolen biodiversity that has yielded a lot of benefit for businesses, and then not for the communities that stewarded that biodiversity. So it's a form of redress for those past failures, and we have to do better in future. It's very challenging to set up systems to capture that 100%, but that's the direction to go in.
Yeah, and that was a significant discussion at COP.
It was a challenging discussion, and many of the countries that are providing these biodiversity benefits that then are, multiplied through the transformation that businesses do on that DNA. They really are due funding. They are the countries that are stewarding enormous amounts of biodiversity, are providing incredible values to our world, and we have not been able to thank them for, that front line to this important topic that is essential. And in fact, they're paying the penalty of not exploiting those resources in our current system. So we owe incredible debt to all the countries that are stewarding our carbon, stewarding our biodiversity, making sure that we have cultural diversity that enlivens our world and, builds our resilience. And we don't have all those tools to make those transfers. Going back to what you were saying about the systems of wealth accounting, we don't have those systems in place yet, but I think we should be moving in that direction as we value these services and we see what's being provided in the full picture.
Now let's go back to financial institutions. From the significant work that you have done, are there any promising examples that you could share with us of institutions who have integrated nature into financial decision-making and taking advantage of some of the opportunities available?
Yeah, so what's very interesting about this topic is we see certain FIs who are leading on risk, certain who are leading on innovation, others who are leading maybe quietly in their kind of business strategy. Some that are leading through who are maybe uncertain how to bring it into their business, but they're leading through their foundations and providing support to scientific organizations. So right now I would say it's a pretty mixed bag. But what's exciting for me is going back to our discussions at Building Bridges about the G20 is leadership on nature that has a regional character. So I mentioned our LAC region members, and we actually convened 300 of our members in LAC region, or 300 individuals from our membership in LAC region, who wanted to talk about financing the bioeconomy. And we see that this is really important that we have conversations at the level that they're relevant. So in each region, we have different types of biodiversity. We have different economic sectors. We have different language, different cultures, et cetera, as well, that make a lot of sense. So we're excited now to start catalyzing and helping. And, for example, I'm so excited for what we can, hopefully do with ANCA in the years ahead, is really working through these regional platforms to not only network what's already been done, but also, have new bold leadership and examples that are relevant and that pay back to the regions that those financial institutions are from. So I think, in the case of African financial institutions, we've seen incredible leadership on financial inclusion. So many of the world's best examples of financial inclusion, including mobile banking, which is, absolutely, surging on the African continent, have come from this region. And I would love, for us to be in 2 or 3 years, just recapping all the innovations on nature finance. I want to give a shout out to the Sustainable Finance Coalition as well, because they are publishing a catalog of all the financial innovations that they've captured from their region. And, we see, for example, Rand Merchant Bank, they've announced without a DFI actually backing them, that they're working on new species bonds and quite a number of other innovations in the pipeline. And we know other African financial institutions are also, looking around and saying, okay, we have an advantage here. We have these relationships, we have this this knowledge, and I think that's extremely exciting. I think just to balance that excitement out, a couple of years ago, there was a World Bank study that looked at the exposure of different bank portfolios to to nature risk. And a lot of African countries, because their banking sector maybe deals with more, primary industries, were more exposed. So I think Mauritius was the highest at 72%. Wow. So there is, there's an opportunity, but there's also a very strong need to diversify the banking portfolio of African financial institutions. So, as we are experiencing ecological degradation and stress, that there are more avenues for that capital to flow into. So again, I just always want to come back to the business case. And, I think that there's a huge one, and it, I don't need to tell you, but, for African financial institutions in this space to look at those opportunities. I would also say Namibia, the green hydrogen efforts have been extremely exciting. So, looking at a huge arid and semi-arid country and say, okay, what can we do to differentiate our economy? That's incredible, leadership, and they may be, I think, heading to be number 2 green hydrogen producer in the world quite soon. And it's really exciting leadership. And I know their domestic financial sector has played a big role as well as international, but and Namibia's one of the banks in Namibia also was very early in issuing a green bond. So, we see a lot of leadership from the region. That's quite exciting.
Yeah. And if you were to come back here in 5 years, what would you want to announce? What would you, what kind of stock take, if you were to do a stock take 5 years from now?
Yes. So as I mentioned, with the UNEP State of Finance for Nature right now, the harmful flows are, just vastly higher.
Exactly.
And we don't have the full picture. We don't have reporting information. So in 3 to 5 years, it would be wonderful if more financial institutions, a bulk that was meaningful in the economy, had a nature target on their portfolios, and also were disclosing their green asset ratio equivalent. So how much are they phasing out? Have they identified to be phased out? How much is, being engaged on? How much is under engagement with transition finance? And then how much is going into solutions? So if we had that full picture, and then, to see that number meaningfully moving fast enough, that we could see that 2030, there was more harm or more good than harm being financed. So the good is, the solutions, but also, this transition finance piece. So that would be, that we were on track for that would be thrilling. We could have some champagne.
Good. And now for the year 2025, what are your priorities?
Yes, so 2025, we're going to have a big focus on transition planning and transition finance, both bringing nature into existing net zero commitments and then nature on its own. So we'll be unpacking, as we briefly discussed, just more of the real economy opportunities and pathways and solution pathways. Then the idea of impact targets for portfolios. We will be launching this guidance and asking banks to come on this journey, and actually 35 banks who have committed through the Principles for Responsible Banking to set nature portfolio targets. We are expecting them on board already. Then we will be working through the framework on Finance for Nature Positive and trying to basically consolidate our nature journey so that it's much easier for financial institutions to walk through. We're also regionalizing our nature strategy, recognizing that these issues look very different in different regions. So we'll be following up with you on that.
Good.
And the road to Belém is going to take a lot of our energy in the year ahead. So we cannot meet net zero targets without ending deforestation, for example. And we see banks and investors particularly who have policies on deforestation, but we don't see the progress happening fast enough. So we're going to be looking at some of these topics, but also the nature-based solutions to climate in this kind of big push towards Belém. So it will be another busy year, and we are growing the team again, and we're trying to have more regional team members, and we will have a new team member based in South Africa, also working on Encore and building out case studies from banks who are looking at nature risk and setting nature targets in their bank, and we'll have similar in other emerging markets. And this peer encouragement, peer sharing, and then that constant communication back to their C-suite about the business benefits are part of our push next year. So it's going to be a year that we're really focused quite a lot on individual, action within individual financial institutions, but then looking at the big picture, systems change. We don't have a biodiversity COP next year, but we're already planning for 2026. So you may recall we had a pavilion for the financial sector in Cali with UNEP and the Finance for Biodiversity Foundation, and we had such a lot of wonderful engagement. So we're already getting the wheels in motion for COP17 in 2026 as well, and trying to build more partnerships in the Commonwealth of Independent States region because Armenia is hosting. So it's a region that's new to me in many ways, but I'm excited to get working with that team and learning more about that part of the world.
So, Jessica, 2025, we have South Africa hosting the G20 presidency. What kind of opportunities do you see, not just for the countries, but also for financial institutions?
Wonderful. So, South Africa's presidency is extremely exciting from the perspective of the bioeconomy. So we're still waiting to hear around how they're going to position themselves on this topic. But we see that on both land and sea, which the bioeconomy covers, South Africa domestically has done so much. So they do have an incredible potential to inspire their peers in this regard. So very briefly, the conservation sector of South Africa, had a very different flavor before 1994 in the apartheid state. And since 1994, there's been an incredible transformation to make sure that this the nature economy, the wildlife economy, the protected areas economy are all contributing to livelihoods and jobs. And there has been a great study by the South African National Biodiversity Institute and the University of Cape Town, which showed that for every one job in conservation, it actually created 5 more jobs, which are jobs that are based on the natural asset being conserved. So that's extremely encouraging. And as we're in a world that's battling high cost of living and inequality and unemployment, I think that jobs argument is wonderful, and it's healthy jobs, green jobs that are that are extremely positive. And South Africa has also been the country at the forefront of reforming its tax system around biodiversity. So South Africa had the first biodiversity tax credit. It now has 4 categories. And again, each of those are yielding economic and livelihood benefits for South Africans. We're also seeing a huge amount of innovation. And I mentioned Rand Merchant Bank and the Sustainable Finance Coalition as fantastic innovators in this space. And there are many others as well. And, all of this domestic experience is, I think, very encouraging that South Africa is moving in many ways towards a bioeconomy and has made these great strides, both the kind of policy angle, the private sector innovation, and then through innovative public-private partnerships. So South Africa and the Development Bank of Southern Africa innovated the ecological infrastructure. So looking at the natural assets as infrastructure and then bringing public and private entities together to finance these in new ways. So I think that there's a lot of possibility for leadership on this topic. And, with the wonderful handover between Brazil and South Africa, I'm very encouraged that this is going to be an exciting moment for nature in the G20.
Wow. As Jessica, what is one big question that you're grappling with? Yeah,
so one of the questions, and I want to mention a few academics because it's sort of an academic space right now. Safas Zu Ermgassen at Oxford and Katie Kedward at UCL London, they've done a number of kind of publications and talks around the question of nature as a public good or an asset class. Mm-hmm. So, when we're talking about private finance for nature, who should do what? Where are the safeguards? Where are the efficiencies in the system? We're looking at many times cases where public institutions have not acted, or they've acted and it's been insufficient. Mm-hmm. So sometimes private finance is coming into a situation because there has been a failure of public policy in some way. And possibly private finance can be helpful, and possibly private finance can be maybe the most efficient route. And I believe that it can be in many, many cases. Mm-hmm. But sometimes it's maybe a distraction from advocacy for stronger public institutions. So I think this who should do what question, I'm grappling with every single day. And I think particularly in actually the research area that I work on is community finance. So human beings in rural areas face incredible risks living with dangerous wildlife, for example. And,
and it's world over.
Yes, yeah. And, the world values these species. And I recall the case with, I think it was the president of Botswana when Germany said, you must maintain your elephants. And the president said, yeah, sure, I'll just send you 20,000 elephants and you deal with them. But, really coming back to a human level, we're valuing the service that communities are providing, and we need to reward them and protect them adequately. And what's the role of private finance? Can we actually have that wealth transfer that we talked about, so that those communities who are really doing something extremely valuable and bearing risks, so that they become beneficiaries at a level that is tangible, that is on par with that value that they're providing. So, that someone who's stewarding, forest resources and they're, rewarded like a banker for it. How do we sequence that? And is really, private finance the avenue to do that? Or do we need to actually think more about, for example, conservation, basic income, or philanthropy or other measures? So this, what should be public, what should be private question is the constant one that I'm grappling with. And I think there is enormous potential on the transition finance piece. And then my questions tend to revolve more around, how do we value stewardship correctly when we know that this stewardship is that front line of our resilience building. And then justice issues like rangers, rangers have a very high death rate and face a lot of consequence, and also spend a lot of time away from their families in difficult and challenging situations. And, how do we reward those individuals for the sacrifices that they make on behalf of nature? So that justice question also, colors everything that I think about day to day in terms of how I can do my job in a way that redresses some of the inequalities and the lack of fairness in what we've valued and where wealth is going right now.
And reminds me of the conversations we've had throughout this week about the need for social justice.
Yes.
Being and equality being at the center of everything that we are doing.
Yeah.
Wow. Yeah. Thank you so much for sharing those challenges. Jessica, there's so much to be done as we approach Belém and as we approach COP17. Thank you so much for sharing your time with us. Thank you for sharing your insights and looking forward to the next couple of years.
Yes.
Yeah?
Thank you so much for having me, and I really look forward to collaborating with you.
Great. Ladies and gentlemen, there you have it. Jessica Smith, Nature Lead at UNEP FI.
Great.